Pay me, pay me, pay me my silver now. Pay me or go to jail. Pay me my silver now.
Hey guys, Bix Weir, roadtour.com. Quick comment on Friday afternoon, May 5th. This article, U.S. bankers urge the SEC to probe short sales and reduce, quote, abusive trading. Is that the cat calling the kettle calling the teapot black? What is it? It is insane what these bankers think they should be able to get away with and what they shouldn't. And actually what they do get away with. Don't forget in 2008, all the finance companies, the SEC came in and said, no more shorting finance companies. Right? Do you remember that? Oh my God. This is insane. You can short the crap out of silver all you want for as long as you want. You can have a handful of bankers, 4, to absolutely step on the neck of silver for 50 years and nobody says a word about it. But once the banking system has some shorts going after them, oh my God, we have to stop shorting. It is insane. What do you think this crap is right now? Ted Butler has worked on this since the 80s. He has clearly shown by the data, by the CFTC's own data, by the CME's own data, by the OCC's own data, shows that a handful of bankers are manipulating the silver price with shorts. Here's a letter from March 2001 by Jim Cook, and this is just a brief summary of Ted's work, who's been proving this day after day, year after year, decade after decade. Anyone dissenting from the possibility of a short squeeze in silver may not be familiar with Ted Butler's explanation of the concentrated short position in silver on the COMEX. For him, the operative word is concentration. The 4 largest short sellers on the COMEX are short approximately 1/3 of the silver produced in a year from mining and scrap recovery. Nothing comparable exists in any other commodity. Ted Butler was the first analyst to point out that this concentration was both manipulative and illegal. In fact, he has made this claim for years while the big shorts profited into the billions. For 35 years, up until recently, they never lost on their short positions. J.P. Morgan was the ringleader of this gang of manipulators and only recently retired from that role after accumulating a vast hoard of silver and gold. All this was uncovered by Ted Butler. It's a topic of which he frequently railed about the CFTC, the COMEX, the Justice Department. Ted pointed out that holding down and suppressing the price of silver in the futures market while accumulating over 1 billion ounces of physical silver was unethical and illegal, a fact that seemed to elude the regulators. Hello, and now the banks are crying, somebody's shorting my stock. And for good reason. For them to short silver for decade after decade, the only reason was to rig the markets, for them to make money and suppress the price so that their banking stocks can thrive. Because gold and silver are the canaries in the coal mine. It is obvious why a government, a bank, or anything related to the Federal Reserve would want to rig the price of gold and silver and suppress it. And that's what we've seen. But now that it's happening to the bankers, and this isn't even, literally, it's going to make no difference if they allow it or don't allow it. But one thing is very certain. We do have shorts making money. This is just going to crack you guys up because this is what is going to happen. First of all, short sellers pocketed nearly $400 million in a single day from the regional bank sell-off. So these short sellers who supposedly the banks hate, supposedly the regulators hate, supposedly everybody hates these guys are putting their necks on the line. Why? Because if you short a stock, the most you can make on that stock is if it goes to zero. The most you can lose is infinity. And it has happened time and time again. Infinity money, meaning you destroy the shorts. The shorts. Look at Volkswagen stock a while back. It might have been 10 years ago. It rocketed thousands of % just to squeeze the shorts and to wring the neck of whoever's trying to manipulate the system. And I was thinking maybe that's what's going on because they clearly bumped up all the regional banks today. And the SEC has come out and said, U.S. SEC not weighing short selling ban amid banking sector worries. Why wouldn't the SEC stop the short sellers? Because they want them to pile on, because then when the riggers jack the price of regional banks double, triple, quadruple what they are right now, all these short sellers are taken out, wiped away. Poof, gone. How to destroy someone you don't like? You get them to go as short as they can, and then they don't understand that you have the power. The U.S. Government, the Fed, the Treasury, the Working Group on Financial Markets, which is the Fed, head of the Fed, head of the Treasury, head of the SEC, and head of the CFTC. That's the Working Group on Financial Markets. And they work with the Exchange Stabilization Fund to click a mouse and put the price of anything anywhere they want at any time. That is the whole reason why the SEC did not come in and stop this shorting. Right now, we saw these regional banks jump 50% today. This is destroying the short sellers. That's the game they play. The short sellers are in on the game as well. And you notice, like with GameStop, the short sellers were losing, and then all of a sudden they changed the rules because that wasn't the right guys, didn't make the right amount of money. I remember when Goldman Sachs had this rogue computer trade that they lost billions and billions of dollars on, and then the stock market actually reversed those trades. Heads I win, tails you lose, the bankers win every time. And if they get in too much trouble, they get bailed out. Will they get bailed out this time? I don't think so. But hey, when's it going to happen? I don't know. They supposedly saved themselves this weekend. Now, all these banks that were about to flop over, their book hasn't changed. Their real estate portfolio is destroyed. Their commercial real estate portfolio is destroyed on their books. The mark-to-market value is maybe 50% of what they put it on the books for. They have lost more than they will ever make again in history. It's over. So the next bank to go down, it might be this weekend, might not. It's looking like because they jacked the stock market up, the bond market up, all the markets are bringing up. It's a computer click by the Exchange Stabilization Fund. I don't know how long this will last. I don't think very long because it hasn't changed the underlying fundamentals of why the banks are going to collapse. Their mark-to-market book is destroyed, absolutely destroyed right now. If the market riggers could have fixed it, they would have fixed it. They would have never let it get this far. And now it's all about who's going to win and who's going to lose. Today, the market shorters lost big time. I mean, literally, they can click a mouse and put the Dow Jones, right now it's at 33,600. They can click a mouse and put it at $66,666 with a click of a mouse. These exchanges are fake. It's all fake. The only thing that's real is what's in your hands, in your pocket right now. Everything else is gone, especially on the banking side. Anyway, that's just a heads up. Interesting paper. There's been a lot of analysis of what happened in 2008 when the SEC came in and said, okay, no more shorting, change the rules. It's their game. They can do that, right? In September 2008, the SEC temporarily banned most short sales in nearly 1,000 financial stocks. We examined the ban's effect on market quality, shorting activity, and the aggressiveness of short sellers and stock prices. The ban's effects are concentrated on larger stocks. There is little effect on firms in the lower half of the size distribution. Although shorting activity drops about 77% in large cap stocks, stock prices appear unaffected by the ban. All but the smallest quartile of firms subjected to the ban suffer a severe degradation in market quality as measured by the quoted spreads, effective spreads, and volatility. So, hey, tails I win, heads you lose. It's a rigged game. Pathetic. And this came out today. U.S. officials are looking into possible market manipulation of regional stock banks. I'll tell you when the SEC is going to stop allowing shorts. When they think they've gotten enough of the shorts into enough pain, have destroyed the short players enough, then all of a sudden they're going to ban shorting. So probably next week. Keep an eye out for next week. Oh, it's crazy on the road to Ruta, let me tell you. But again, hey, silver price has been shorted for over 100 years. So get used to it, banking stocks, bastards. This is Bix. I'll talk to you later.